Hello, I'm Ainsley Crum. I'm the CFO of Legacy for Life. And if you're just now getting started with your small business, I've got some tips that you can take advantage of. Tax advantages are an amazing opportunity out there for your new business. So I'm going to try to help you, first of all, identify what some of those items are, and then also kind of give you some tips on how to take advantage of those and things to think about as you're setting up this new business. Currently, you may be a W-2 employee or somebody that doesn't have their own business, but instead you work for someone. So your typical deductions now only include maybe your mortgage deduction, charitable contributions, some automobile expenses, and of course your dependents. Now, if you don't itemize your deductions on your 1040, then you probably don't take advantage of the top three because you can't. So the one great thing to think about when you've started this new business is the fact that now you're going to be opened up to a whole new world of deductions that can help save money in taxes, which is wonderful. The next thing to look at is the fact that you own a business now, so we need to start figuring out how we're going to set this up and things to start identifying that could be a possible deduction so that you make sure and take advantage of it. It's always more difficult to wait till the end of the year and decide, oh, that could have been tax deductible, because finding receipts and information may be a lot more difficult. It's amazing the number of things that can qualify. And so, therefore, my biggest tip is to get a big folder of some kind. Maybe it's a 3-ring binder. Maybe make divider tabs for all these different items. And then stick your receipts, stick documentation in there. And then at the end of the year, you've got a lot of this information. But first of all, go to Schedule C, the IRS website. You can print this out. And this is kind of just a general map of all the different items the IRS will allow you to have. Now, again, look into their further instructions or talk to a tax professional to understand each one fully, because there are some limitations on some of these. But in general, it's going to get you thinking about all the amazing things that you can deduct related to your business. Now, one thing that's not going to be on the IRS Schedule C, but something you definitely need to consider is the last one down here, cost incurred to stay qualified as a business partner. And we're going to talk about that and how that's unique to Legacy and actually several MLMs, but definitely it's a cost that will add up significantly and can make a huge difference in your tax bill since you can deduct them now. All right, so let's kind of go over some of the bigger ones. The biggest deduction could be your home office. There's direct and indirect expenses to the home office. One thing you need to consider now that you've just started, and maybe you've already had a small business and you have a small office already, but what things you need to consider when you're setting up a home office is what it takes to qualify. First of all, you must be able to prove you run a part-time or full-time business. So you have to look like you're in business. Pretend like, the IRS was coming in and looking at you and saying, is this somebody that's doing a business? Are they tracking their expenses or anything a normal business would do? You have to prove that you're running that and you're not just creating a fake company, so to say. You have to show your business. The other thing is you have to have a dedicated area of your home. If you set up a desk in the middle of your bedroom and it's not a dedicated space, the IRS is not going to allow that. They're not going to say that's a home office because they're going to say you use it for personal use and therefore it's not deductible. So it has to be a dedicated space. It has to be something that looks like business would be taking place there. Again, think about if you go to a job every day. I mean, you're not going to have a bed in your office at your regular job. So you wouldn't want to have that at your home office either. You just need to measure that space, and it's a percentage of your square footage to your full square footage of your home. is what is going to be deductible. So that's really important too. So set it up, get it organized so that it looks like an actual office and it's dedicated. And then you also must be able to prove that you use this home for business purposes, this part of the home. So it may be as simple as doing your blog or answering emails or sending out letters or something like that. It does not have to be that you have to have clients coming into that space on a regular basis. But however, if you do have meetings at your home, that can help as well as far as identifying that it is a business. Okay, so how do you calculate your home office percentage? Again, what I said before, you take the home office square footage, divide it into the home square footage of your house. So this is an example. If you own or rent a 1,500 square foot home or apartment, and you have a 500 square foot room dedicated to your business, then 33.3% of your expenses are tax deductible. Again, it's good to get this done at the beginning of the year just to kind of get a general idea of making sure you keep track of the expenses, because there are direct expenses that are going to go into this: decorating your home office, buying furniture, painting it, anything that you're doing. If you have to do any kind of remodeling in order to get a dedicated space, that's all tax deductible. So again, being aware of it at the front end will help allow you to get more tax advantages. If you have cleaning services for your home office, if you have somebody come in to clean your home and they're cleaning your office as well, then actually a percentage of that would be 100% deductible. Now, if you have insurance on your business equipment, let's say you have a computer and a printer and scanner, most people don't get insurance on those types of things. But if you're having larger equipment, you definitely probably would. That would be deductible. Okay, so another thing that is kind of unique to the home office, which is kind of nice, is that you can deduct expenses associated with a percentage of your home. So utilities, rent, insurance, it's the list, is pretty much anything that takes to keep your home livable would qualify. The only difference, or the only thing that maybe isn't, is your telephone. And you have to have, just real quick, on the telephone, you have to have a dedicated line in order to be able to get that deductible. But anyway, again, check with your tax advisor. He can give you a better idea of the home office, but something to think about. Another thing is auto expenses. Very key to start tracking this right at the beginning. I recommend getting a small little calendar, pocket calendar you can keep in your car at all times. And every time you get in the car, you either write your odometer reading, and every time you get out, you write what it is, or you write the number of miles that day that you traveled. Because if your home office is your primary place of business, which in most cases it will be, then every time you leave your home to go do something business related, that mileage will count as a deduction. So there are a lot of possible, mileage adds up very, very quickly. And if you get to the end of the year, I promise you, you're not going to remember every single mile you traveled. And you'll be amazed at the number of miles you travel when you start tracking it. That can also mean, like, if you're going to Starbucks to meet someone for coffee to talk about the business, that mileage to and from Starbucks counts. So again, and right now the mileage deduction's 55.5 cents per mile. So as you can see, that deduction can get rather large. This is probably the easiest way to track the auto expenses. There's another opportunity you have, which is to itemize your expenses. You can do depreciation, actual gas, actual oil changes, actual repairs, tires, all that sort of thing. The key with that is you have to keep every receipt that you have for gas, oil, repairs, and da-da-da. And usually, in most cases that I've seen, mileage deduction ends up being worth more than the other one anyway. And you have to pick one or the other. and then you have to be consistent. So it's something to consider as you start your business, and which car will qualify for that. And again, when you're doing your taxes or someone else is, they're going to ask you lots of questions that go along with this. So having all this information kind of organized at the front end will make it a lot easier on the back end. Another thing that's unique, and this has nothing to do with which of the other two you choose, but parking is a deduction. Again, keep your receipts. If you don't have a receipt, this is where that little logbook will really be effective. If you go and you're parking while you're meeting somebody for lunch and it's $10, a lot of places don't have parking receipts, especially like if you're in a parking lot downtown or something like that where you got to stick the money in the little booth. You don't get a receipt. So write it down. And the IRS, as long as you have some written documentation and it's below a certain amount, I think it used to be if you had something over $75, you had to have a receipt. If it was less than $75, then as long as you had some documentation, you'd be good. So again, just that little logbook could be very helpful in tracking parking, because that can add up as well, depending on, I guess, where you live. The other thing, real quick, I didn't have it on the slide, but tolls also add up. So tolls can be something that can be deducted just like the parking. Okay, so some other smaller things that you may not think about, but start tracking now. Entertainment and gifts. You can deduct 50% of the cost to entertain a prospect or business partner. This includes meals. The deduction, again, is only limited to 50% of the expense. So if you spend $100, you can deduct $50. But again, if you go to Starbucks and you get a $5 cup of coffee, $2.50, every day for several months can make a huge deduction in the end. Another thing that's good to know is that even if you don't pay for the prospect or business partner, you can still deduct it. So if you go out with your friend and you guys split the check, you can still deduct 50% of your meal. So you do not have to pay each time. Some people get confused by that. They think that only if they pay for the entire thing are they allowed the deduction, but that's not true. Another thing, gifts. You can deduct gifts valued at $25 a year to clients. Now, it doesn't sound like a whole lot, but you think about you giving product, that can add up. The other thing is, just little bitty tidbits of, hey, here's a $5 gift card. Thanks for, buying some product. I don't know, whatever you've decided. But, $25 per client can be a significant deduction if you have lots of customers or clients. Okay. Another thing, education. We have the whole thing with ANSIG, the training opportunity there, and there is a small monthly fee that is 100% deductible. If you belong to any professional organizations, the fees and dues associated with that, deductible. Publications, trade shows, conventions. One thing to really consider is if you subscribe to a magazine, because it's along the lines of your business and it helps with marketing, it helps with and knowing the trends, that would be 100% deductible. Trade shows, there's a lot of those. Even if you're not showing there, you're just attending, the fees to get in are 100% deductible. Same with conventions. Anything that you need to further your education or to give you better information to run your business would qualify under that. Okay. Now, retirement plans. Some of you, if you don't work for an employer and you don't already participate in their retirement plan, you can set up a retirement plan for yourself as a small business owner, and 100% of those contributions are tax deductible. Interest payment on dedicated business cards and separate bank accounts. Also, very important thing. And this brings up another good point as you're opening up your small business. I highly recommend, as do most tax professionals, highly recommend that you set up a dedicated credit card or debit card, however you choose, and a dedicated bank account that is completely separate from all your personal monies. And that is very important, and the IRS will be a lot happier if you ever get audited that you have it separate, and you will be a lot happier because they will be less likely to scrutinize every expense. The problem a lot of times people run into is when they've commingled their business and their personal, and the IRS does not like that at all. But again, the expenses that you're going to incur are going to be tax deductible. So I think it makes it easier from an administrative point of view to keep them separate. The IRS likes it, and you get to deduct those expenses. So that is something that is very advantageous. Okay, another thing is insurance. And I don't have this on here, but even medical insurance premiums can be deducted to a certain percentage. So, that is a great advantage, especially with health insurance premiums being as high as they are. But any business insurance, umbrella insurance, liability, even like if you have short-term disability or long-term disability insurance on yourself, that would be deductible, the premiums on that. Percentage of your property insurance, that goes back to the home office deduction. So again, that's only a percentage as your home office versus the square footage of your home. Another thing is, just liability, workers' comp, those types of things. Okay, so I kind of talked a little bit about the home phone. It must be dedicated, but here's some other things to think about. Your internet connection, email services. Most people have a Yahoo account or something, or Google, and it's free. But if you pay for an email service, postage, can add up. It's amazing how fast that can add up, especially with postage going up again in January, I hear. Office supplies, pens, paper clips. I mean, those types of things can get pretty expensive too. If anyone's who's been to Office Depot or Staples lately, those little purchases add up quickly. Mobile phone. Most of us have a mobile phone now. And our percentage of use to business versus personal, you just have to calculate that and figure that out and stick to it. And then whatever that percentage is, you can deduct that percentage off your bill. So hypothetically, you work 50% business, 50% is for personal use, and your bill's $100, you can deduct $50 a month. That's $600 a year. So as you can see, I mean, that's just one instance, but there are so many more. So now we've got travel. Travel is one that a lot of people talk about, and how exciting I could get to deduct all my vacations as long as I go to a business conference for a day. Well, not quite. Travel gets a little tricky, and this is another area that the IRS sometimes, likes to really investigate because there is so much abuse. So here's a couple things to remember, and again, look at this more fully to understand your situation. But if you're traveling to a business event, the plane ticket would be deductible, or the gas. Again, you could do the 55.5 cents a mile, or you could do the actual expenses, whichever one, the hotel rooms, etc. However, again, if you're mixing business and pleasure, the IRS likes to look at the fact that the portion that's business related is deductible, the portion that's fun and pleasure related is not. So if you fly to Hawaii for a conference is only one day, and then you stay an extra 5 days in the hotel. Your plane ticket would be deductible, which is a huge expense in most cases, and the 1 night hotel room, or 2 nights, depending on, planes. So, but then the other 4 nights wouldn't be. That would be pleasure. You can deduct your food up to 50%, and tips to your bellhop or any of those types of things can be part of that travel expense. But again, just be careful on how you allocate those. All right, marketing, advertising, public relations. Before you go out and buy a bunch of advertising on Google AdWords or whatever, I mean, we're all about it, but make sure you're tracking all of that information. Again, that's 100% deduction. Taking out an ad, whatever. One thing I was talking about earlier that I'm really excited about and is wonderful part of the MLM business, especially this one with Legacy, is that your monthly automatic delivery is 100% deductible. So the reason why we know this is we talked to the IRS and answering a couple of these questions. If you can answer yes to them, then it's deductible. The first one is it required to qualify as a business representative? Yes. For Legacy, we require that you have an ADP in order to qualify for commissions. Well, you're in a business, so if you're not making money in a business, then you're not really in a business, are you? So in order to get paid commissions, you must have an ADP. So therefore, it is the thing that qualifies you as a representative. Another question is it a common practice for all members? Yes, it is common practice. It's common practice in most MLMs that you have a monthly auto ship. Is using the product a key component to the success of the business? Of course it is. Here at Legacy, we highly recommend that all of our business associates use our product. We believe that you need to be a product of the product. And in order to be a product of the product, you need to use it. So having the product every month is a key component to your success. And so you can look at more information on the IRS publication 535, business expense. But here is a synopsis. To be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one that is common and accepted in your industry, which it is. And a necessary expense is one that is helpful and appropriate for your trade or business. It's helpful and appropriate for you to know the product and to use it. An expense does not have to be indispensable to be considered necessary. So again, these are just some ideas of things to start thinking about as you've opened a business. This is for educational purposes only and should not be considered tax advice. Obviously, everybody has their own unique situation, and unfortunately, in our day and age, there's a million different situations going on, and they change constantly. So some of this information might change in 2 weeks. As far as like this mileage deduction, that changes all the time. So please consult your tax advisor before applying a lot of these deductions, and make sure that they fit in your case. If you have a question about any of them too, it'd probably be a good idea to talk to them. Again, things change constantly in our environment. But anyway, I hope this gives you a good start of things to think about and things that are going to be beneficial to you in the long run. Keep your receipts. That's very, very important. Stay as organized as possible, and good luck.